Welcome back. The Nifty has just slipped into the red now as we speak, still trying to hold on to that mark of 25,000. Currently, nothing to worry about, of course, absolutely at the flat line is the index, but a lot of earnings reactions. Credit Access Grameen has now extended its losses, 6.25% down on the stock. PB Fintech too is down 3.5% as we speak. A lot of cautious commentary coming in from the brokerages after its quarterly results. Godfrey Phillips was down 5% last Friday. It's down another 4.5% in today's session as well. So not good going for Godfrey Phillips. Although delivery slightly off the highs of the day, still holding on to gains of around 11.5% at 358 is a delivery, but of course still well below its IPO price of 487. Taking the market conversation forward now with Mukul Kochhar from Investec Capital Services, who is joining in. Mukul, good morning. Thank you for joining in. Before we get to other sectors, I'd like to start off with the flavor of last week, right, which has been defense. A lot of contradictory reports have come in with the long term, yes, that there is going to be increased defense spending, so on and so forth. But now, of the kind of moves that you have seen, almost 30-40% in a week, valuations look stretched. So how are you positioning yourself in this segment, and what are you telling your clients?
No, this is, undoubtedly valuations are very expensive. If you look at it honestly, defense capital expenditure in India on equipment is probably $10 to $15 billion. Yeah. And most of these companies, if you look at it, and maybe that goes higher after what we saw recently, most of these companies that you see have significant top lines already. So growing based on Indian defense expenditure, honestly, these will not be high growth companies in most scenarios. And the multiples that are getting ascribed to them, they're excessive at this point, given the kind of growth that comes through. That all changes if Indian, defense equipment is globally accepted and, we become major arms exporters, which we are in certain segments. But, for certain segments like shipbuilding, etc., that's still a little while off. So I would sort of agree that, as a segment, it's an attractive segment. We need to spend internally. We are spending more internally, but, the pie right now is not big enough for these to be hyper growth companies.
Okay, pie
which the multiples are.
Absolutely, very, very expensive multiples that are there for these defense companies. Mukul, good morning. This is Vinnii joining in the conversation. Just a thought in terms of the market as well first, before I dive into separate sectors. We've seen that comeback coming in and a bit of a recovery coming in from the 22,000 level for the market. But there's a lot that is happening on the geopolitical front, right? Tensions between India, Pakistan, you don't know where that is going right now. You don't know what is happening with the tariff front as well. So what are you keeping an eye out on? Do you expect better scenarios coming in overall on the fundamental front?
This is a very good question. Honestly, if you look at it, and I've spoken about this, I think, on your channel only before, that fundamentals of the economy are pretty good. Forget about some stocks being overpriced, depending upon most scenarios of growth that are out there. But the fundamentals of the economy are per se very good, and there are enough cheap stocks to pick from. In fact, I'll talk about Nifty valuation later, or even BSE 500 valuation later. But I think the biggest catalyst, and you said, what are you keeping your eye on, is the fact that, our external situation, which is our, essentially BOP, and before that our current account. I think, we are in sight of having a structural positive or structurally neutral CAD at least, yeah. That actually changes a lot of things for India. So for instance, if we have, a structurally, neutral CAD, then, we get away from our historical twin deficit problem, because of which RBI has been rightfully so running a tight, monetary policy throughout for the most part. They can loosen up on that. And, evidence of that's already started coming in. The April OMO that the RBI did, the 10-year bond yields, which are the lowest, in the last, decade or two outside of the COVID crisis. So a lot of it actually is already sort of starting to show through. It's the beginning, which is that, fixed income yields in India are going down. Yeah, and that has a lot of implications for equities, largely positive. In the context of the low 10-year bond yields, and this is where I said I'll come back to valuation. When you look at Nifty is actually very well priced. In fact, the earnings yield spread, which is inverse of PE for Nifty, and the spread between 10-year bond yields, which is where they get priced off, is the lowest it has been in the last decade, and this makes equities attractive. So there's always expensive and cheap stocks, and that's where the stock selection takes place. But broadly, the Indian markets are looking attractive, and that's what's holding us up.
Then why
Last point,
FII is not coming in the full-fledged form that one should expect them, right? They've just come back recently. But do you think that will also see a point of comeback at some point of time?
Yeah. So that's the part of the equation that actually sort of is important, because when I say that your current account becomes attractive, that is one leg. Then additional flows gives you more liquidity, and that is what gives RBI comfort to keep monetary policy easy. Now, when you talk about FIIs, that's largely a relative game. Yeah. So they should find India attractive versus other markets. These equations stopped playing last year because India itself was undergoing a little bit of a slowdown. Valuations had gone to another extreme, and suddenly China became attractive. Yeah, and a lot of flows went from India to China. If you look at it, everything in this equation has changed. China has gone into a trade situation with US where earnings looks to get downgraded, even though there's a sort of a compromise in the near term. Nobody's saying that trade war is over between US and China. US itself has gone through a little bit of a growth slowdown. On a relative basis, India therefore is looking attractive. There are the kind of pocket of slowdown that we went through post elections. We are pulling out of that, so growth is accelerating in India. Stock earnings growth is accelerating in India. Rest of the world is going into a downturn. So I think the flows here, which have just recently started turning for the month of April or May, are going to sustain for India.
Mm-hmm. So in this attractive Indian market, Mukul, where are you putting your money to work?
So broadly, let's put the attractive in context. With a 6-year bond yield at 6%, if I'm getting 12% return, I think my cost of equity is fulfilled. I mean, I make 12% in India. I'm really good with that. Yeah. So in that context, financials look fairly okay. I think there's a little bit of upside that may come from consensus building really low profit growth in FY26. I think consensus may actually get surprised on that. So financials, banks look pretty attractive. Within financials, there's some capital market plays which look quite good today. Healthcare as a pack looks good. I would say pharma, diagnostics, all of them are showing good earnings. And then in the context of the valuation, the prices that they trade at, they're looking quite good. Within autos, we have a few picks over there, which companies have corrected, and we see enough earnings momentum there. Even within consumers, for the first time, we are able to get some stocks because we've always thought consumer was very expensive, but post some correction and some earnings momentum, we are able to find. So we are able to find, value. I would say India has never been a value play, but I would say adjusted for growth, some reasonable plays in the market today.
Okay, Mukul, thank you so much, for joining in with us, giving us some insight in terms of the markets, global scenario, how India stands as well, in terms of your sectors as well, which you like. Thank you so much for that. But on that note, we're going to step into a very short break, viewers. Don't go anywhere. After the break, we have the management of Sharda Cropchem joining us to talk to us about the Q4 numbers.